information, and I've been telling people now for months or a few years now that people perish for the lack of knowledge. How will people perish for the lack of knowledge? And the thing about it is not the highfalutin economics knowledge that a lot of times we think is the problem. The problem is the very basic things that we just not aware of. Very, very basic. So I'm going to go over some very basic things today. I just start my stopwatch so, I can make sure I don't go over my 2 hour mark. Just kidding. Just kidding. Uh, this is not going to take very long. It's going to go pretty quickly. And you have about 30 seconds to get your family member, your cousins, get a few people on, because we're just going to be talking about the basics, the very basics of, protecting your retirement savings. All right. Let's see here. Let me adjust this. I need somebody to let me know if you can see my screen. We're good. My thumbs up. Excelente. All right. So our Community Financial Education Forum, we call it Totally Lit, Learning Information Together, has been our pleasure to bring this information to our community. And so today, like my associate Eduardo said, we're going to be talking about protecting your retirement savings from the perils of life. All right. Now, I've been in the insurance industry for over 25 years. I started working with seniors with the Medicare program, and then I expanded to commercial insurance, and then the other side, the life insurance and annuities and so on. But so I'm going to give y'all a little bit of benefit of my experience here. And when we're talking about the perils of life, protecting your retirement savings, let's start with what do we think retirement is? Most people look forward to retirement. Most people believe retirement is going to be that period of rest, that period of, I made it, I'm all right. Bring on the palm trees, the beach chairs, relax, don't bother me. Life is good. We're going fishing. We're going to do all that good stuff. And that's great. I believe everyone should have a goal, a vision, a dream to do that. As a matter of fact, as I talk to some of my younger clients, they want to do exactly this at 38, at 42. They don't want to wait till 60 or 65. They want to do it earlier. And that's okay, because I realized a long time ago, retirement is not a function of age. Retirement is a function of money. If you have money, then that you can control your time and do the things you need to do, take care of your needs and your wants, then you can call it retirement if you choose to. But the question is, what does retirement mean to you, right? And one way or another, definitely retirement is tied to money. So, this here is a retirement calculator. Most people that I have spoken to about retirement never looked at something like this. Just never. I mean, and this here looks all fancy, and it's got this charts and all this kind of good stuff. And that's great. But retirement is really a whole lot more simple than that. I ask people all the time, when you retire, if your house is paid for, your car is paid for, how much money do you want to live on? Either on a monthly or annual basis. Doesn't matter which one. And 99% of the time, the number one answer that I get is, I don't know. And then the number two answer I get is, nobody ever asked me that before. And so that is a very basic question to retirement. That is not a super postgraduate question. It's basic. How much money do you want to live on? Because the money that you have available to you is going to determine your lifestyle. It's going to determine whether you can go on vacation or you got to go to Galveston and come back. It's going to determine whether or not You can eat the way you want to eat, whether or not you be able to go to Papados once a week or once a month, or on special occasions only. It's going to determine whether or not you can go to the casino once or twice. I had a neighbor, retired, and he used to love to take a trip to the casino every month, right? Whatever it is you want to do, are you going to have the funds to do it? And so, starting with that basic question, how much money you want to live on, you got to consider your living expenses and so on. And that's a whole other, that's another a talk as to exactly how to calculate that, and the things you need to take in consideration. I may have to do a part two, but that's something else. But today, we're going to talk about protecting it. Let's say you determine whatever it is. If it's 10,000 a month, 5,000 a month, however you determine that amount. Now, how do you protect your savings to get there? Because your savings is what's going to determine the money you can live on. And a good rule of thumb is whatever money you save, you put that in a retirement program to give you a lifetime income. It's going to give you somewhere between 3 and 6%. That is it. So that means if you are able to save up $100,000 for your retirement income, now you can count on somewhere between $3,000 and about $6,000 a year to live on. Okay, that's how the numbers shape up. If you save up 200,000, then you can look at maybe 6 to about 12,000 a year. A year. It's going to pay 3 to 6% roughly per year. So based on how much money you need to live on, that's how much you got to save, right? So how do we protect this money that we're putting together? As we're putting it together, when we do have it together, how do we protect it against the perils of life? So let's talk about perils. What are perils? And if you look in the insurance industry, these are some of the perils, right? Fire, hail, theft, vandalism. It's just a few. How about these? Depending on the company you look at and the program you look at, it will protect against more perils, right? So here you have the same fire and theft, but how about damage caused by attempted theft? How about lightning, hail? You got windstorm, rising water, earthquake, riots. Look at these. How about this? How about vehicle cause damage? How about smoke? Do you know that if your neighbor's house is on fire, yours not, but if your neighbor's house is on fire, all that smoke that comes from that house that could, cause your walls to look black on your house and could get into your house and, cause damage. That's covered under some policies, right? Perils, right? Vandalism, volcanic eruptions, okay? Freezing of home systems, right? So different things like that. So there are different perils out there. So let's talk about the perils for your retirement savings, all right? How about an untimely death? Right, you got this nice job, you got your degree, right? And then you graduated and you got this nice job, nice career, and you're ready to go. You got your family, you got a wife, you may have 2 or 3 kids, you're ready to go. But now you have an untimely death. So what happens to your retirement plans? Because the family still has to grow, right? You still want to have a home for the family, hopefully, and you would definitely like your kids to go to college, maybe, and so on and so forth. So a lot of these things were possibly going to be provided by your retirement plan, right? So if you have an untimely death, what does that do to your retirement savings? is gone. How about chronic illness? A chronic illness is not being able to do two of the six activities of daily living for a period of 90 days or more. I had a sister had a chronic illness for 13 years. She had a stroke. And because of the stroke, she was never able to get out of bed on her own for the rest of her life. And it was 13 years, right? These things happen. Critical illness, right? How about cancer? How about, man, there's so many illnesses out there, heart attacks, strokes, you know. These things may interrupt your plans, your saving for retirement, your retirement savings plans, right? Critical injury, um, just going to work, coming home from work. There's so many possibilities of having an injury, being in a car accident. I have a client that said, you know, Mr. Robinson, I want to save for retirement, but I am so concerned about protection. I have to drive to work on this freeway every day, 15, 20 minutes, and I'm very concerned. I want to be protected. And so that's critical injury. You know, when COVID came around, a lot of very healthy people ended up with critical illnesses that they didn't have before. Because one thing would bring on something else. And so, as healthy as we feel, right now, I feel like Superman's assistant. You know, I feel very, very good. Who guarantees that that's going to be the case tomorrow? Right? So, you're working, you're trying to save and prepare for retirement, but, you know, crazy stuff is happening. Market losses. Ooh, that's a good one right there, right? Market losses, especially right before retirement. Now that can be crazy. You know, I had an associate that had $1 million in her 401k, right? And that $1 million turned into 500,000 in 2007. She was hoping to retire in 2008, but the market dropped. She lost half of her money, and she had to go back to work for another 5 years in order to be able to retire the way she wanted to build back up her retirement savings. So, market losses, that could be a challenge also. Perils of life. How about a new roof? Y'all don't think is a peril? New roof. I gotta change the roof. Where we get these $13,000 or $15,000 from? Not you, but I know some people have taken it from their retirement savings. I know none of you guys will do that, but I know a few people that have. How about a new truck? I need a new truck. I need I need a new car, right? When I get this money, and so you go into your retirement savings again. Uh, family loan, a gift, you know, hey, critical injury. I think I talked a little bit about that in my other slide. How about college, right? A kid getting ready to go to college. I want to send them to college, and I don't have the only money I have is my retirement savings. So hey, I gotta take out $50,000 out of retirement savings for college funds or somebody getting married, wedding, right? Mortgage. You know, I need to pay off my house. And so, look, a business opportunity or investments. I had a client that I reached out to him just when I started in the retirement space, and I was letting him know that I'm now, I've expanded my business to cover retirement. And he said, "Well, I wish I knew before because I had $1.2 million in my 401k." And he said, "I invested it in a medical company and I lost all of my money." He was over 70 years old. He had a stroke shortly after that. He was working in the oil industry. He worked offshore and was an engineer, but no recovery from that kind of loss. And so these are things that can attack, destroy, um, hinder our retirement savings. So how do we protect it, right? Let's combine protection with savings. So if you want to have a good retirement, maybe we can combine, life insurance with living benefits and maybe an index cash accumulation program that benefits from the upside of the market and then is protected against the market losses. How about that? Let's talk about that. Let's talk about life insurance with living benefits, right? Life insurance with living benefits have programs that cover terminal illness. Sometimes the doctor would say, "Well, I'm sorry to tell you, you got 24 months to go, 24 months to live," and that's pretty tough, especially if you have a life insurance program that only pays when you die. But if you have a program that have terminal illness, then you can accelerate that debt benefit and maybe even a reduced amount, but maybe you get 85 or 90% of that money now while you're alive. I'm a believer that the fact that a doctor say you're going to die, I don't mean you have to die. I think you can fight. But you're going to fight this kind of fight, you're going to need some money. And if you have $1 million program, you could accelerate $850,000 of that program. I think you got some fighting money right there, right? So terminal illness. How about chronic illness? Remember, with terminal illness, we talk about an untimely death, right? And so that's what we're referring to with terminal illness. If you have an untimely death, something that's coming on you, we plan to retire at 60, 65, or 70. But if you're 32 and they're saying you have some type of terminal illness, you need something to fight with, right? And so now chronic illness, and we talked about, an illness that would stop you from doing two of the 6 activities of daily living for a period of 90 days, which is bathing, continence, dressing, eating, toileting, and transferring. Can you get out your bed on your own and go sit in the sofa someplace, right? So this program, this life insurance for living benefits, says if you have this challenge, then you could collect money from your program every month. I'm talking about thousands of dollars. In some cases, $10,000, $20,000 a month, right? Now, critical illness. Imagine a program that covers you for ALS, aortic graft surgery, aplastic anemia, blindness, cancer, cystic fibrosis, end-stage renal failure, heart attack, heart valve replacement, major organ transplant, motor neuron disease, stroke, and sudden cardiac arrest. Imagine that, right? And then also you have critical injury also. So it includes coma, paralysis, severe burns, traumatic brain injury. One of my sisters, I had 2 sisters that suffered strokes. One of them suffered a stroke that within 2 or 3 weeks, she was out of the hospital. She could get up, she could talk, she could walk, all that good stuff. But the stroke was as if she had a traumatic brain injury because she was a registered nurse. And when she tried to speak, you could not understand what she was saying. But in her mind, she was telling you everything. But you just couldn't. If you didn't know her and you couldn't finish her sentences before, you couldn't understand what she's saying. So it's kind of effects like a traumatic injury. You don't always have to hit your head, but a stroke can do something like that for you, right? So, life insurance with protection, all right? And so when you think about the whole process, and man, I'm running out of time. I didn't even get I talked a little bit about uh, having a cash accumulating process, and that cash accumulating process would help you benefit from the upside of the market, but it would not let you participate in the downside, in the market losses. So when you put that together and you put a life insurance program that cover all these perils, what you get is a program that could say, if you have time to save, you're going to have money when you retire. But if you don't have time to save because of a uh, untimely death or chronic illness or critical illness or critical injury, then you may have more money than you intended to save. And that's the way you can protect your savings, and you can ensure that your future plans are going to happen, even if you got to start 30 years ahead. Because just imagine you intend to save uh, 800,000 or 500,000 or even $1 million by the time you get 30 years down the road, but you have a critical injury or critical illness. Like one of my partners, she just collected maybe a year or so ago $1 million from her life policy, probably more money than she intended to save. So now you have what you wanted to do even now. And that's the way that I believe is the best way to protect your retirement savings. All right. So, like I said, my name is John Robinson. I enjoyed sharing this information. There's so much more that we could cover along this line. We have a program called Protect 95, where we encourage people to, if you're 60 years of age or older, let's help you protect 95% of your retirement savings now, so that whenever you choose to retire, that money would be there. And you can continue saving in your 401k or 403b, but now you have the knowledge that 95% of the money that you save, work so hard to save, is protected in an index program against market losses. All right. So I'm going to turn it back over to my host, Ed. And I appreciate this opportunity for sharing this information with the community.